There is a name in your kitchen you probably use every single week, but you can't find it on the stock market. Well, not yet anyway. A company with a legacy that's a century old is about to go public, and today we're going to break down exactly what that means.
Okay, think about the last time you went grocery shopping. Did you grab some sambar mix, a packet of vermicelli, maybe some biryani masala? Yeah, chances are one of these familiar packages made its way into your cart. They become staples in our homes for a really good reason. So who's behind all these iconic brands? Yep, it's Orkla India. This is the powerhouse that's brought together the legacies of MTR Foods, Eastern Condiments, and Rasoi Magic, all under one single powerful roof. But here's the thing, this wasn't some overnight success story, not at all. Orkla India's story actually kicks off almost 100 years ago. So let's take a look at the journey from a single, humble restaurant to the packaged foods giant we see today. It all started way back in 1924 with the now legendary Mavali Tiffin Rooms in Bengaluru. That incredible success was eventually packaged up for all of us as MTR Foods. Now, the modern story really begins in 2007, when the Norwegian giant Orkla ASA bought the brand, bringing in global scale. Fast forward to 2021, they added the Kerala-based spice major Eastern Condiments to the mix. And then finally, in 2023, all these powerful brands were brought together under the name we know now, Orkla India. All right, so why the big move to go public right now? Well, it's pretty simple. They're sitting in one of the hottest, most exciting markets in the country. The demand for convenient, high-quality packaged food it's absolutely exploding. And just to wrap your head around the sheer scale of this, the entire packaged foods industry in India is valued at a mind-blowing 17 lakh crore rupees. I mean, we're talking about everything from flour to dairy. It is a colossal market. Now, of course, Orkla India isn't trying to be everything to everyone. They're focused on their sweet spot, spices and convenience foods. But even that specific segment alone is a massive 42,400 crore rupee market. This is their playground. But here's what gets investors really excited: the future. This market isn't just big, it's growing like crazy. We're looking at a projected annual growth rate of nearly 11% every year through 2029. That is some serious momentum. So in a market this huge and growing this fast, you gotta ask, right? How does a company actually win? What's Orkla India's secret sauce that sets it apart from all the other brands sitting on the shelf? Well, the first big thing is just how much they do. You see, most of their competitors, they kind of stick to 4 or 5 product categories. Orkla India, though, is spread across 6. From masalas to ready-to-eat meals and snacks, they've carved out a spot in pretty much every part of the Indian kitchen. That wider reach gives them a lot more stability and a lot more ways to grow. So how do the numbers actually stack up against a behemoth like Tata Consumer Products? Well, sure, Tata is way bigger in overall revenue, but the really interesting story is in the efficiency. There's this key metric called Return on Capital Employed, or ROCE. It basically tells us how good a company is at using its money to make more money. And as you're about to see, this is where Orkla really shines. And you can see it right here. At almost 33%, Orkla's ROCE is significantly higher than Tata's. What does that mean in simple terms? It means for every single rupee they put into the business, they're squeezing out more profit. That's a sign of a really, really efficient operation. And the other huge piece of this puzzle, their distribution network. It's an absolute beast, especially their stronghold in South India. This network is a massive advantage. For instance, after they bought Eastern, their household reach in Karnataka literally doubled. And get this, in Telangana, their market share grew 10 times over in just 3 years. That's the kind of power a rock-solid network gives you. Okay, but let's be real. No investment is a sure thing, right? And even a company that looks this solid, like Orkla India, has its own set of challenges. So for a balanced picture, we've got to look at the potential speed bumps. So there are a few key things you got to keep an eye on. First up, price volatility. Spice prices can go all over the place, and since that's over half their costs, a price spike can really hit their profits. Second, they get a third of their raw materials from just 10 suppliers. That's a concentration risk. On top of that, you've got their dependency on the Norwegian parent company, super strict export standards, and even a unique one. Any problem at one of the independent MTR restaurants could spill over and damage the brand. All right, so now that we've got a good grip on the business, let's get to the main event, the IPO. What exactly are they offering to investors?
So, the total size of this IPO, it's coming in at 1,667 crore rupees. That's the total value of shares that are going to be sold to the public for the very first time.
Now, this next part is really, really important to understand. This is what's called a complete offer for sale, or OFS. And what that means is that the money being raised, it's not actually going into Orkla India to build new factories or expand. Nope. It's going to the parent company in Norway, Orkla ASA. They've been invested for 18 years, and now they're basically cashing out a piece of their stake.
So, based on the price they're setting for the IPO, the whole company is getting a valuation of roughly 10,000 crore rupees. That kind of gives you a sense of just how big this company is as it steps onto the public stage.
So when you boil it all down, what's the big story here? What's the bet you're making with Orkla India? It's really this. It's a bet on a very unique mix. The global processes and financial muscle of a Norwegian giant, blended just right with a deep, authentic understanding of local Indian tastes. And that right there leaves us with the $1 million, or I guess the 10,000 crore rupee question. Orkla India has absolutely proven it can protect and scale a century of local flavor. But now, as a public company, the real test is whether that incredible heritage can satisfy the global market's relentless appetite for consistent, high-speed growth. Only time will tell on that one.